Good morning, everyone. So what I'll try and do is bridge some of the remarks from Ambassador Solomon to some of my remarks from Li Jian. And I want to thank Professor Danan. This is an absolutely great program, and it's an honor to be a part of it. So I want to leave with you today a couple of core ideas. The first one, and to be very clear and upfront about this, is China wants its own tech sector. China has two core principal drivers from this. First, economic development reasons, moving up the value-added chain, driving R&D, growth, and employment. But it's not just macro variables. China wants to return to being an innovation leader globally. Arguably, for hundreds of years, China was the innovation leader. And you can, in some ways, look at the last 50 to 100 as the anomaly, as the exception. And in my view, China wants to reverse that. China wants to return to the past, as Ambassador Solomon used, and create its own tech sector, both for economic development reasons and for national security reasons. So that's the first point. China wants its own tech sector. The second point, which follows from this, is technology markets in China are what I call synthetic markets. Technology markets in China benefit from a dense web of related policies designed to advance the development of the technology sector in China. And my whole point here is it's systematic. It's deeply engineered into the very sinews of the marketplace. So a couple of examples. I spent a lot of time talking to Chinese tech companies to better understand them, to learn what they're doing. And it becomes very clear that basically every part of their business is in some way massaged and influenced by the Chinese government. So tremendous tax preferences, subsidies and financing, particularly around R&D support. There's a very important role in China played by technical standards and product standards and procurement that are set by the government. Localization policies, patents, IPR, government procurement, market access, you get the idea. So my point is that tech in China is a synthetic market. And it flows from the first point that China wants its own tech sector. You've seen the technology sector formally designated as strategic industries over many decades. My colleague pointed out economies and countries that embrace technology succeed. And as a result, that filters through in very granular ways in the technology sector. Now, my view is that China is having tremendous success developing its own tech sector. And as a result, the technology sector is going to become more competitive globally, not just inside China. And I think sometimes people who don't spend time looking at the Chinese sector forget just how brutally competitive the technology sector is in China, but that is going to go outside of China. So what you see here is just a very simple technology stack. And my point here is if you start at the bottom from telecom and then move up the stack, networking, semiconductors, computers, software, internet, and you can make that much more detailed and fine-grained, China is developing leading companies at every layer of the stack. And that becomes very powerful because in technology terms, when you have a full stack, when you have an integrated ecosystem, you can build platforms and then applications on top of it. That becomes tremendously powerful. You know, there's been so much press around Alibaba. And for a room like this, I think everyone has been familiar with Alibaba for many years. But in some ways, I look at Alibaba as not the beginning, but kind of as the end of the beginning. And we're now actually very far advanced, and I won't run through those names. But there are world-beating companies at every layer of the stack, and I think the global tech industry should expect a lot more. A couple other quick points. The global tech supply chain has moved to China with a vengeance. And this is going to increase global interdependence. On the top, you can see falling cost of goods sold for global tech companies, and it's fallen dramatically. Why is that? Because the whole tech supply chain has moved to China. On the bottom there, what you can see is a bottom-up analysis of Taiwanese-based technology companies. And when you add it all up, it's about $350 billion US annually. And this is just largely tech hardware. Most of this is produced in China. So at $350 billion, that's arguably over half of the global hardware produced is in China. Now, one of the things that makes China's move into tech different, I would argue, than Japan, Korea, Taiwan, is the role of China's domestic market. It's huge, particularly in hardware and in consumer tech. So China is actually the largest market in PCs, in handsets. It's very material in servers, but interesting enough, a relatively minor role in software. Here I'm showing database and ERP software. And of course, China is also the largest internet market and e-commerce market. And that makes a huge difference because if you're an export-led strategy, then ultimately you're dependent on foreign markets, and other countries have the ability to shape those markets and essentially shut them. But I think what we're seeing is China leveraging and using its role as the largest domestic market, particularly around mobile. And I can't overemphasize that enough. And you heard about it just a minute ago. You'll hear more about it all day. And I think that's going to be fundamentally important. And again, it's fundamentally different from the strategies of Japan, China, Korea, Taiwan, and will allow China to exert power in ways that others before it didn't. A quick word on governance and regulation. Quite frankly, it's a big challenge. It's a big challenge, I think, for everyone, but it's a particular challenge if you're not used to living, breathing in that context. Transparency in governmental processes are very difficult. The consistency and predictability of regulatory responses, multiple constituencies, the alignment of interests among shareholders and management can be very different. Degrees of corporate transparency, and for public equity investors, this whole issue of VIEs or variable interest entities is hugely important. We could spend days just talking about these, but my point here would be the governance and regulatory framework is very, very different. There's much less transparency. It does have its own rhyme and rhythm and reason, and many of the people you're going to hear from can talk to you about that. But I think you have to proceed very, very cautiously as an investor in China or as a business operating in China. One of the big, for me, million-dollar questions out there that I think will drive a lot of both political and economic dynamics and also commercial success is the question of can China innovate? I'm not going to present an answer to this, but I am going to, I think, present a couple of observations and tick off a few areas. I mentioned earlier that China's pursuit of this is different than prior state-led strategies, and so I think it's a mistake to merely project the experience of Japan, Korea, Taiwan. In other words, if you look, for example, at the semiconductor sector, there's a very clear roadmap where first Japan was a challenger and took share. That was followed by Korea, which was followed by Taiwan, which is now being followed by China. So while there's some similarities, I think there's also some differences. I think one of the things I've taken away from this, from my experience both in the public sector and private, is that top-down strategies are particularly good at what economists called catch-up, at getting to the production possibility frontier. But I think once you've achieved that position on the curve, there's a very open question around state-led strategies will be able to go beyond that. And so I think that definitely applies to China. But a couple other things. I mean, I think in some ways China's openness to change in markets is very important. Something that Japan, for example, just by tremendous intellectual property, financial capital, et cetera, has been a real inhibitor. And I think China will be very different here. And the question came up earlier, can China change? I think that's particularly important. And it's also not an easy one. You know, when I'm in Beijing, I get very different feelings about that when I'm in Shenzhen and you're in the middle of this tremendously vibrant commercial ecosystem. I think the role of the overseas Chinese community, and particularly the overseas Chinese technical community, is hugely important. There's fascinating anecdotal case studies about that. The role of patents and intellectual property, not a new issue, but hugely important. There's a benign view here that says, well, when China develops its own intellectual property, as it rapidly is, China will protect intellectual property too. I think this is going to be a very important issue and a two-edged sword. Two other issues I'd throw out, and then I'll move on. I think the strengths and weaknesses of the Chinese research system is hugely important, and you hear conflicting views about that. How innovative is it? And lastly, to kind of sum up, you know, the government clearly does have a huge role, as all governments do, around the R&D institutes and the role of the ministries. And there's rich debates about, well, all this government influence, is this in fact positive? So, for example, there are those who will argue that the role of the government was hugely important in leading to the success of companies like Huawei. You can't ask him any questions about it. You have to ask me. There's others who say, you know what, the Chinese government's role actually constrained and hurt Huawei. And in fact, Huawei succeeded despite the role of the government rather than because of. So these are not simple issues. But I think this question of can China innovate is going to be hugely important, and it will have spillover effects into economic growth, into national security. I'm going to wrap up because I want to make sure we have time for questions. On a little more practical way, you have a simple stack, again, from the internet on the top to networking on the bottom. My third kind of big idea, the first one to kind of wrap up, is China wants its own tech sector. The second one is that tech markets in China are synthetic markets. They've been engineered to achieve particular outcomes. And the third one, and maybe this goes for lots of areas, is you want to invest with China or align with China, not against it. So China has just a tremendously vibrant and dynamic, and I think very innovative, internet industry. And it's tremendously competitive. The role of state-owned enterprises is less. I think Alibaba IPO is kind of the end of the chapter rather than the beginning. It's been going on, and it's only going to get more aggressive. I think a lot of opportunity. I think if you go to the bottom of the stack, so to speak, if you look at compute and networking, I think in China at least, those sectors are going to be dominated by Chinese companies, by Huawei, by ZTE, by Inspur, by many, many others. I think in the middle it gets more interesting. Software storage, China has a limited presence, but I think you can expect it to grow. And I think the interesting test case where you should really focus is on semiconductors. China has been very active in building its own semiconductor industry for years. So on one hand, this isn't new, but they're just launching a multi-year, multi-billion-dollar program to really accelerate the development of the Chinese semiconductor industry, focused on wireless and mobile. And so I think that's where you should look. So I'm going to wrap up just by flagging a few other issues. I'll just tick them off, and then I'll let you ask questions or not. Cybersecurity. I think it's going to get worse rather than better. The two are looking at this through very different ways. Antitrust. You see actions versus Qualcomm. I think that has everything to do with China's efforts around mobile and semiconductors. Microsoft, Tokyo Electron, Applied Materials. These are not accidents. These are not random. And you should be asking why and what does that mean going forward. Market access. There's this slogan you've probably heard of, IOE, IBM, Oracle, EMC. Will non-Chinese enterprise companies have access to the Chinese market? So let me just stop there. I think China's already has a huge presence in global tech. I expect that to become bigger in mobile, in big data, in cloud. And I think that's going to present a unique set of both challenges and opportunities. And I think it'll be a perfect test case for all the issues that Ambassador Solomon talked about, whether these become positive sum, wealth-creating, confidence-building measures, or whether these become negative sum, rising power versus incumbent power, and zero-sum games fighting over power and influence. Thank you. I'll stop there.